Hello, I'm Michael Hainsworth. Investors love small cap stocks. It's the story, the thrill of the chase, the prospect for a great payday. But the TSX Venture Exchange has had a rough 4 years. AlphaNorth's Steve Palmer hasn't. He's up in a down market. How does he do it? And can he do it again? I've got the fruity drink and the sunglasses. And I'm gonna find out, because I've got the exclusive. Here in the sun-soaked Bahamas, Steve Palmer and AlphaNorth are co-hosting the Capital Event Management Conference, bringing together investors and innovators for high-level networking and deal-making. As Canada's premier conference for investors and high-growth public companies to connect one-on-one, the CEM team has set new attendance records at this year's event. Cheers.
Yeah, cheers.
So how are you pulling this off?
Well, I think we take a longer term approach than most other investors and particularly fund companies. Unfortunately, the way investors behave these days is they're trying to hedge risk and they take profits too soon. We take a longer term approach and we overlay technical analysis to help time our exit points mainly. Well, we find technical analysis most useful in timing the sell decisions. In my view, selling is the hardest component of investing. Most investors get the opportunity to buy into a company at the same price, the same terms, often in a private placement, but when they sell, really distinguishes performance.
So here in Bahamas at this conference, what are you looking for?
Well, I own some of the companies that are presenting here, so I'm looking for some updates and I'm looking to get some new ideas. Like at last year's conference, there were 6 companies that have since returned more than 100%.
How much time do you put into researching a company you want to buy?
It varies. It depends on how much we're looking to invest. Like the larger our investment, the more research we do. Our top positions we would build like financial models. Well, we typically look for something that is proprietary with a company. Share structure is also very important. Management track record. If management has skin in the game in terms of share ownership, that's also a very important factor.
So then tell me about that exit strategy and in the use of technical analysis, because there's that phrase on Bay Street that goes, there are bulls, there are bears, but it's the pigs that get slaughtered. How do you avoid getting slaughtered?
90% of small cap companies fail. So it's very important to get out at the right time. The important thing that I always tell people is not to chase performance. Even professional investors tend to chase performance, and I don't think that's an effective longer term strategy. We try to get in early, get positioned before a trend starts, and if you do that, it greatly enhances your returns.
What's your favorite example of avoiding being a pig that gets slaughtered?
Wait a minute, I gotta think about that.
1 hour later.
A specific example? A couple of years ago, we invested in Desert Mountain Energy at 22 cents per share and realized over 10x returns when we sold. The share price subsequently retraced back to where we originally purchased it. This highlights the importance of well-timed exits. Many people sell too soon. Many people get too attached to the company and ride it all the way up and all the way back down. But if you can get out at just somewhere in the middle there, it makes a big difference.
So that I know you don't want to give away the secret sauce, but tell me about that technical analysis component, because there are so many different methods you could use to help time a sell decision. What do you use it? Or what do you not use?
Well, we typically don't use the common ones. Like a lot of people talk about moving averages.
Oh yeah, the MACD, the 50-day, the 200-day.
And if everybody's using it, it kind of diminishes its usefulness.
The small cap exchange is down about 80% from the peak. But what about the 160% increase we saw for Steve in the same period? Can he pull it off again? Let's find out.
I think we're in the early stages of a new bull market for small cap Canadian equity stocks.
Since 2021, the market's declined by 76%. So 2 things I look for in terms of bear markets is time and magnitude. and we've had 76%. This is a significant sell-off. Plus, we've had 4 years.
I don't think we're at the bottom right now. The low actually was in October 2023. The market's up 20-some% since that time. So it's up modestly since that time. But I think there's a lot more to go, and I think things can accelerate. In terms of sectors, we're fairly agnostic right now. Like, I think we're in a unique situation where we can have a bull market in which all sectors participate.
We have a new U.S. president. Trade wars are looming, and the small cap market's been down for 4 years. So the question becomes, what does the future hold? Investors get nervous in times of uncertainty. Well, what does a Trump administration mean for small caps and their ability to raise money?
Well, the main thing about the Trump administration is it does create a lot of uncertainty, more than we've probably ever seen before on the political front. If the company delivers on their business plan, that should be the main driver of the share price. For resource companies, obviously, it's always good to have the commodity price that the company's involved in going up as well. But normally the political environment and political decisions are not major factors.
So if we see that uncertainty continue and we see a tit-for-tat trade war between Canada and the United States, a country that provides them with a lot of their critical minerals, what does that mean for commodity prices and ultimately the underlying stocks of those companies?
Yeah, that would be good for commodity prices and the stocks. The junior market in Canada is comprised of 2/3 are resource companies, so that's a big part of the junior market.
Are you making investment decisions based upon that?
Not per se, but we are doing a little bit more in the resources lately. I focus more on the company fundamentals as a first and foremost. Macro considerations like commodity prices are important, and political situation is typically not as big a driver as those other factors.
Right. If you take a bottom-up approach to investing, if you find good companies with solid foundations, they can ride out almost any storm. Are you excited about the year ahead?
I'm very excited. I think small cap is the primary beneficiary of that. Small caps have underperformed, and I think as the bull market in small caps accelerates, we could see some substantial returns. And for investors looking for exposure, if they buy into my theory that we're at the early stages of a bull market, there's no better way to capitalize on that from a fund perspective than the AlphaNorth Partners Fund. We've always had the #1 performing fund during TSX venture bull markets with an average return of 665%.
Steve Palmer may be a cool, calm exterior, but on the inside, he's super excited about the coming bull run for small cap stocks. With his combination of bottom-up investing and using technical analysis to determine exit positions, he's setting up AlphaNorth to take advantage of the alpha and the beta of stock investing. If there was one takeaway from this conversation for the viewer, what should it be?
I think it's important not to chase performance, to chase returns. That's what investors often do, and that's the wrong thing to do. My name is Steve Palmer, CIO of AlphaNorth Asset Management.
With the exclusive from the Bahamas at the CEM conference, I'm Michael Hainsworth. All right. Good job.